Hello and a warm welcome from Helabas Capital Markets team. I'm Thomas Kors, this is Matthias Melms.
Hello Thomas.
We're here, hi Matthias, we're here to bring you our quarterly update on the primary markets in euros. And what a quarter it has been. The last quarter was in a lot of respects not quite what it started out to be. We're a little bit behind in a lot of the stuff that we would have liked to see in covers, even though the overall market has been doing rather nicely. But as covers are our main focus, I'd like to go directly to that and let Matthias explain to us the development of the covered market in the last quarter.
Yeah, thank you Thomas. We have an issuance volume of around 116 billion euros in euro-denominated covered bonds in the first half of 2024. That is down around 25 billion euros in comparison to the first half in 23. But we have seen remarkable developments. Among others, we have several new issuers in the market.
Which have been what? Who?
So first of all, we have two parts of the world where the issuers are coming from predominantly. The first is Germany, where we had the pleasure and brought two new issuers from the savings bank sector to the market with the Savings Bank of Dortmund and the Savings Banks of Bremen. Besides that, the Savings Bank of Hanover and the Landesbank Saar have issued their inaugural benchmark transaction.
So savings banks to the rescue. But not only savings banks in Germany, I understand we also had a number of slightly more exotic issuers joining the euro covered bond markets, right?
Yeah, exactly. We also have had two new issues from Singapore, Maybank and Standard Chartered, with their inaugural benchmark transaction. And besides that, Equitable Bank from Canada has also issued their inaugural benchmark transaction. They were active in the market before, but only in sub-benchmark format.
So one of the new developments, or rather a resurgent new development, has been more new issuers coming from other jurisdictions. What other factors have you identified driving the dynamics for the covered bond markets in the last quarter, or indeed the whole first half year of the year?
Yeah, thanks for asking, Thomas. As you can see, the new issue premium has deteriorated in the second quarter of 24. While we have seen roughly 4 basis points in the first quarter, we are now down to nearly flat. In terms of tenor, both quarters were not so different, with an average 6.7 years in the average maturity. But remarkable for that is that in comparison to the second half of 23, we are up close to 2 years in the average maturity. The book size in the second quarter is a little bit down from 2.3 billion euro down to 1.9, while the coverage ratio is nearly on the same level with a little bit above 3. So in terms of deals, we can identify that the first quarter was a little bit stronger. We have seen 7.5 deals, so between 7 and 8 deals per week in the first quarter, and now we are down to 5. But brings this in perspective, 5 deals per week is still a very remarkable deal. In terms of deal size, the average deal in the first quarter was 750 million. We are close to that level with roughly 700 million. And ESG, which is normally not such a huge topic in the covered bond market, we have seen that just 5% of the deals in the second quarter were ESG deals.
That's quite interesting, because for the first quarter it's around 15%. Bear in mind that if I'm not mistaken, for the overall euro market, the percentage of ESG trades, including SSA and govies and so on, has been closer to 20%. Absolutely. So it was already significantly weaker than the overall average in the first quarter. Now it's down to 5%. Why do you think that is?
So first of all, ESG assets are often used to have a spread impact. These days, the spread impact on the covered bond market is not so feasible, so that the issuers uses their collaterals more for other asset classes where have a higher impact.
Okay,
overall.
So I guess it's fair to summarize that the market in general has been slower, but qualitatively it has started to improve. Now we only need to fix the attractiveness of the ESG part of that. But hey, I mean, that has been strong in other market segments. Let's look at the senior unsecured bits.
Yeah. In senior pref, we are down in comparison to last year. Year to date, we have seen issuance of roughly 50 billion. That is down by roughly 1/3 in comparison to 23. But this year, 23 was remarkable. We've seen a lot of MREL-related issuance, what we haven't seen in 24. So we have seen a normalization of the market.
So the senior pref market has not been quite as hot as it used to be last year, right?
Completely correct, Thomas.
Okay, how about senior pref then?
Senior non-pref, everything that it was in the last years with roughly 70 billion. We are more and less in line with the issuance volume in 23 and in 22. So there is not so many changes in senior non-pref. For the rest of the year, we expected something around 95 to 100 billion.
But S&P is still about 25% higher in terms of total issues than the pref market. Is that just because the spreads are more attractive, or what do you think? Or is it just the regulatory issues?
I think it is mostly regulatory dominated.
Okay, well then let's go to the last part of our little outlook, the SSA market.
Yeah. So in the SSA market, issuance volume is at 240 billion.
That's excluding sovereigns, just agencies and supras, right?
Sub-sovereign agencies and supras, yeah. And this 240 is in line with 22, a little bit more than 23. And for the rest of the year, we are not so optimistic in terms of volume, so we expect roughly another 75 to 100.
Okay, so the focus for investors should be still on the covered bond sector.
That would be the conclusion.
There are unlikely to be new issues coming from the sovereign side or the supra side, right?
Not at the moment, at least, that we see that.
Okay, well, in terms of what we expect for the remainder of the year, what are the volatility drivers in your view, Matthias?
So overall, I think with the call for snap election after the election for the European Parliament, Mr. Macron has surprised not only me, but the whole market segment, and causes at least some volatility and a little bit a closing of the market, at least for 1 to 2 weeks. As we have some more elections ahead, with now also having an eye on elections in 3 German federal states where the poll shows a relative majority for the far-right party, that could cause volatility for at least some periods in the market. And of course, US election is in focus of all of us, especially after the debate last weekend between Mr. Biden and Mr. Trump. Nevertheless, we still have the wars in Middle East and Ukraine. And one of the topics that we have for several months now is inflation, or should I say better, disinflation, and the market reaction from the central banks.
So in general, there are a number of very recognizable items on that list. I do recall at the beginning of the year, we already said there are more elections this year than ever before. A lot of those have already been behind us now, but the more important status is actually that there have been some unexpected new elections, like the UK one and like the French one. Yeah. So, but that keeps us busy. So thank you very much for those data.
Thomas.
And thank you for tuning in. I hope we have you back on our channel in the next quarter. Wishing you a nice summer. Take care. This is Thomas Kors and Matthias Mems. We're from Hellerbar. Bye-bye.